Hi, I'm Gary from Westwood Estate Planning. Today we're talking about inheritance tax. This is a tax on your estate when you pass away. Your estate includes property, money, and possessions. Now, it's a concern for many families because they want to provide and preserve wealth for their loved ones. Now, in the UK, everyone has a standard inheritance tax threshold. This is called the Nil-Rate Band, or NRB. Is currently £325,000. This means the first £325,000 of your estate is generally tax-free. Understanding this is key. In addition to the standard NRB, the nil rate band, there's always the residence nil rate band, or RNRB. This applies if you pass on your home to direct descendants. Think children, grandchildren, or stepchildren are included too. It's an extra allowance. Now, currently, this can be anywhere up to £175,000. This RNRB can potentially increase the tax-free amount for your estate. It helps further protect your family home. Now, inheritance tax can feel daunting, but understanding a few of the key exemptions can make a big difference. These exemptions help you reduce potential tax and protect your hard-earned wealth. They offer legitimate ways to pass on assets without incurring the 40% inheritance tax charge, and this can bring immense peace of mind. So let's go through these now. So first, the spouse or civil partner exemption. This is incredibly valuable for many families. Any assets you leave to your spouse or civil partner are completely exempt for inheritance tax. This applies whether transferred if you're in your lifetime or on death, provided that both partners are UK domiciled. This means you can often pass your entire estate to your surviving partner without any inheritance tax being due at that point. This exemption is fundamental to family planning. What's more, any unused nil rate band from the first partner to pass away can be transferred. This means on the second death of the second partner, the surviving partner's estate could benefit from up to double the standard NRB, potentially up to £650,000, plus any unused RNRB, that's the residence nil rate band, can also be transferred. This significantly helps preserve wealth across generations. So next up, the annual exemption. So this allows you to give away a certain amount each tax year within your lifetime, completely free of inheritance tax. Currently, you can give up to £3,000 in total each tax year. This can go to one person or be split among several. If you don't use your full £3,000 allowance in one tax year, you can carry it forward to the next tax year, hooray, but only for 1 year. Now, this means you could potentially give away up to £6,000 in a single tax year if you use both the current year's and the previous year's allowance are unused. It's a great way to make regular tax efficient gifts. Then we've got the small gift exemption. Now, beyond the annual exemption, you can make small gifts of up to £250 per person in any one tax year. You can give £250 to as many different people as you wish, completely tax-free. However, these gifts must be genuinely small and separate. You cannot use this as part of a larger gift to the same person. It's designed for thoughtful, smaller gestures. There's also the marriage or civil partnership exemption. Special rules apply to gifts made for a marriage or a civil partnership. These allow larger gifts to be made tax-free to help a couple start their new life together. The amount you can gift depends on your relationship to the couple. So parents can give up to £5,000. Grandparents or remoter ancestors can give up to £2,500. And anyone can give up to £1,000. These gifts must be made before or at the time of the ceremony. It's a generous way to contribute without inheritance tax implications. Another powerful exemption is gifts out of normal expenditure. This is often overlooked, but it can be incredibly useful for those with surplus income. You can make gifts of any value free of inheritance tax. Fantastic. But provided that these conditions are met. So they must be part of your normal expenditure, meaning you have a regular pattern of making such gifts. They must be made out of your income and not from your capital. And you must be left with enough income to maintain your usual standard of living after the gifts are made. So this is great for regular payments like school fees or allowances, but keeping meticulous records is very important for this one. Finally, gifts to charity. Giving to UK registered charities is an excellent way to support causes, while also reducing your inheritance tax liability. All gifts to UK registered charities, whether made in your lifetime or in your will, are completely exempt from inheritance tax. There's no limit to the amount you can give. And furthermore, if you leave at least 10% of your net estate to charity in your will, then the inheritance tax on the remainder of your taxable estate is reduced from that 40% we mentioned before to 36%. This means your charitable giving can have an even greater impact. Now, navigating inheritance tax and its exemptions can feel daunting, but it really doesn't have to be. At Westwood Estate Planning, we pride ourselves on a thorough and empathetic approach. We really take time to listen and understand your unique family situation and your financial goals. We'll help you explore all potential solutions, from simple gifting strategies to more advanced planning, ensuring that you make informed decisions. These decisions protect your family's future and provide you with genuine peace of mind. So if you seek clear, empathetic guidance in your inheritance tax position and want to ensure your wealth is protected for your loved ones, please click the link in the description below to book your free, no obligation 15-minute chat with myself today. We're here to help you understand your options and find the right path forward. So thank you so much for watching. I'm Gary from Westwood Estate Planning, helping you protect your future and your loved ones. Have a great rest of your day and see you on the next video. Bye-bye for now.